Okay, am I sure? Hello. Okay, good day, everyone, and welcome to the EXCO mentorship program. Today is an exclusive event we're having to all our clients to say welcome to 2022. So to everyone, glad you made it, glad you're here, glad the market is still moving, and it means there is still an opportunity for everyone in this market. Okay, so we want to appreciate everyone. Thank you so much for taking our time. So we will begin. I'm receiving a lot of requests. Just a moment. Let me clear out all the requests and comments I'm having here. So fine and good. So we will start as it is. Just a moment. Just a moment. We should be good. All right, so great. Okay, so thank you all and welcome to EXCO mentorship program. And my name is Gabriel. And today we will be looking at an exclusive session with me where I'll be showing you a simple strategy you can use to kickstart your 2022. It's so exciting to be here. I see a lot of comments. I alone can't handle it. So I have a couple of my colleagues are online. They're here with me as panelists, so they will be taking on some of your questions. Anyone having technical issues, they will be happy to help you out on that. So please stay with us. It's just going to be an impactful session in this program today. So it's exclusive, it's completely free, and it's targeted to everyone that that is an EXCO trader. Okay, that's what I can say. Tomorrow's session, of course, is going to be another step higher than this. So it's another session for those that have qualified for it. But this strategy is designed to give you a head start, you know, into the year 2022. So for everyone that didn't qualify, do well to qualify for tomorrow's strategies. I have 4 strategies I'll be teaching all through this week. So today's session is completely free, and it's completely free. So from tomorrow, we'll be going deeper and deeper. So if you want to be part of it, why not call your account managers and know what it takes to be a part of it? All right, so let's kickstart the year and kickstart the program. So thank you all. This program, the strategy I'm going to be teaching you is a simple strategy that we call the power play strategy. All right, the power play strategy. Now, everyone knows what the market is all about. Talking about any business or any endeavor you are currently doing, there's something that is so sure about it. It's much more complex than the markets or the financial market can be simplified. Now, the strategy was built on 2 basic premise or 2 basic principles, because there are just 2 participants in the market, that is the bulls and the bear. So I'm going to be taking you through the overview of what the strategy is all about. And we're going straight in so that we can have enough time, you know, to look at this strategy and have a practical overview or practical sessions of what it is, because this is supposed to be a full package so that you have all it takes to get started, get trading, you know, into the year 2022. So the financial market, although very complex, can be summarized into a simple interplay between the bulls and the bears. All right, I started by saying every endeavor you have, even in the simple task of being in a class, you are faced with complex decisions, decisions. So, but when it comes to the financial market, everything about the market is summarized into two interplays, what do you call it, trading decisions. It's either the market is bullish or the bears. All right, this is just how, despite how complex it is, this is the only way to summarize the market. So you are not faced with decisions if the market is going to move 40 degrees, 45 degrees, or 180 degrees, or all of those kind of things. No, it's a simple decision of either the market is going up or it is going downwards. Now, this strategy seeks to find the turning point of dominance between these market participants and how to profit from the power play tussle between the bulls and the bears. So it's a simple strategy, and I'm going to give you the tools to use to trade this strategy and exactly how to trade this strategy, the logic behind it. So what I'm trying to do here is to give you an overview, give you the logic behind the strategy so you can understand how to resolve the complex decisions that we are always faced when it comes to the market. You know, the market, many people can, before they place a trade, they go to Bloomberg, they go to so many other sources, just trying to find what should I be buying or should I be selling? True, this should be the only decision. But here we're trying to bring it down for you to understand that for the market to go up, it means that there is a bullish dominance. All right. We learned in elementary economics that the higher the demand for any product or service, the higher will be the price. If there is no value that people, or there is no reward system, there will be no demand for any service, there will be no demand for any product. So demand is derived from value. All right, demand for any product is derived from the value you derive from that. So when we see that there is a bullish movement in the market, it means that there is a perceived sentiment that there's a reward at the moment that price is going to rise up. So people tend to buy, and that dominance in buying pressure pushes price to go up. So what this strategy seeks to unfold or seeks to teach is for clients to see exactly where this dominance is taking place. All right, we're going to be analyzing the market down to candlestick analysis. You see, one thing about Exco here, what we try to build our traders is that we build you from the scratch, and everything we teach you, you get to see how you can apply it even in the advanced classes that we teach. Okay, so you're going to see how everything you've been learning since the beginner's course, how you can apply it on this or in this strategy and begin to make money. Okay, so let's start with the easiest part, and that is okay, I see some question. All right, from the very beginning, and that is the setup of the strategy. I want to believe everyone here has already gotten an overview on the direction we seek to achieve, or the direction we seek to achieve in this strategy. That is to understand precisely when the bulls begin to dominate the market, there you should know that's when I should buy. And when the bears begin to dominate the market, and you also know this is where I should sell. And the interesting thing about this strategy, why I picked it as the one I want to teach all Exco traders as the year begins, is because it fits all trading styles. Either you're a scalper, a day trader, a swing trader, a position trader, whatever strategy you choose to trade with, you're going to find your place in this strategy. Okay, so sit back and let's dive right in some more. All right, so the strategy setup starts from the simplest and one of the most used trading indicators in the market, and that is the moving average. Okay, and in this case, we'll be using the EMA, that is the exponential moving average. All right, why are we using this indicator? For everything I'm going to be sharing with you, I want to explain the reason behind it. Now, the EMA, it's a trading indicator, or what we call the moving average indicator. It's a trading indicator that helps us to identify sentiment in the market. All right, of course, you know that sentiment, whichever party, when I say party now, participants in the market, either bullish sentiment or bearish sentiment, whichever that is dominating the market, it means they set the tone for the market, and that tone is what we refer to as trend. All right, so when we say that the market is trending upwards, it means that the buyers in the market have set the sentiment to be bullish. All right, so we use the indicator called the moving average to show us an average movement of price over a period of time. All right, and the average closing price, the average closing price of each candle, the average closing price of each candle, you know, if it is ascending consistently, tells us that the market is bullish at a particular time. All right. So if we're having an average closure, so let's assume now, let me give you a simple example because I want this to sink in deep. Let's assume that the average price for iPhone, okay, started with $500. The next day is closed at 510. The upper day is closed at 515. And then the next day again is closed at maybe a lower price, 512. Upper day is closed at 520, 540, 550, a little decent again, maybe 545, followed up by 560, 570. You can see that the average closing price of an iPhone price in the market is increasing. So this is what the moving average seeks to measure, because you really cannot do this just looking at each candle as they close. So the moving average tries to do this for us and gives us an average closing price, and thereby we use it to determine which people are dominating the market because of the average closing price over a period of time. So the two moving averages we're going to use in this session or on this strategy is the EMA 200 and the EMA 20. Okay, EMA 200 and EMA 20. These are some of the two most important. All right, we also have EMA 50, but I'm not going to be speaking on that on this strategy, because this strategy is based on EMA 20 and EMA 200. So the moving average will apply, will help us to measure the moving average, the average closing price of the moving average over 200 candles in the past. And we'll also use EMA 20 to measure the average closing price of 20 candles past. So you see, I'm not measuring, talking about 1 hour or 2 hours. I just use candle because I'm going to be teaching you this strategy to fit into the scalping, day trading, swing trading, and position trading, whichever this strategy fits into all. All right. So let's move on to the next indicator. So to apply this indicator, you have to select moving average and set it at period 200, shift 0. Let me pick up my writing tool. I see I can't demonstrate anything here. Just a moment, laser, good. So you pick up, you put shift 20, 0, period 200, select EMA method, that's method of calculation, set it to exponential, and then apply to close. Apply it to close. Of course, you can apply to open, but I want you to apply it to close. Then choose a style, a color of your choice. Repeat same thing for the next indicator, which is still moving average, but this time change 200 to 20. You can choose the same color if you wish. I use the same color in my own. If you did this correctly, what you will get is something like this. All right. So you'll get something like this. So the higher the EMA, the black line that trails the candlestick, this is the 20 moving average, and the lower one is the 200 moving average. Okay, this is the 200 moving average. So if you did it correctly, this is what you're going to get. Now let's move on to the next. Application of the EMA crossover indicator for crossover EMA's confirmation. So there's another tool I'm going to give to you. So for everyone listening, please, you have to request this from your account manager. It's called the EMA crossover indicator. This one here, EMA crossover indicator, because sometimes it's hard to tell exactly when EMA 20 is above EMA 200. So this extra additional tool will be given to you into the year 2022 will help you to identify exactly when this crossover happens. All right. But if you feel you can still do it by merely looking at them, fine and good. This comes in handy when the market is ranging, when it's we have a flat market. Okay. Then let's look at the next one. Then the application of the Trend Rider Pro indicator. Now, the Trend Rider Pro indicator is one indicator released by EFSCO, and you can get it on our website. I will also be taking you through how to get it and how to download it onto your MT4. All All right, I can understand that some of you are using your mobile phones. All right, so I will be looking at some other tool you can use to navigate this, because you can't install the Trend Rider Pro on your mobile phone. Anyway, you can't install any indicator on your mobile phone. It only works with the local or custom-made indicators that came with the download on your phone. All right, so the indicator for Trend Rider Pro, you will be using the default setting as it is, 2, 100, 1000. That's the multiplier. 2, the Trend Rider period, 100, and the maximum bars set to 1000. If you've done this correctly, what you should get on your screen will look like this. Okay, what you will get on your screen would look someone says request for recording. Yes, it's being recorded. All right, the session is being recorded, so you can request for the recorded version after this class. Okay, so once you've completed your installations, all right, this is what you should get. I'm going to use a few minutes to go through the installation. All right, I'm going to use a few minutes to go into the installation. Then we would go into the strategy implementation. All right, so let's do this. Let's at least get to this point. Let's bring everybody to this point. This is the basic setup. Then we'll get into the strategy implementation in the next slide. So let me just quickly go to my MT4. Let me quickly get to the MT4 and then we'll take it up from there. Okay, just a moment. I need to stop share screen. And great. Okay, so let me share this. Duplicate. Where are you? Just a moment. Share screen now. Okay. All right, here we are. Okay, so everyone, I want to bring you up to speed on how you can get to this same point. So let me delete everything and I'll just show you exactly how to get to this point. So first things first is to install or upload or bring on board the moving average indicators, okay? The moving average indicators. So you go to functions or indicator list, all right? You have to go to your indicator list and go to trend, then select moving average, select moving average, all right? You select 20, maybe for the first one, and click OK. Then you repeat this action, go to trend, select moving average. If you're using your mobile phone, way to do this is you tap on the screen, you're going to see a round menu on your screen. Tap on the screen, you see the round menu, select F. There's a function there or an icon labeled F. You click on it and the whole indicators on your mobile phone will pop up. Then you search for moving average. Search for moving average. Once you select moving average, then you put in the period for 200. Select MA methods. There's simple, exponential, smoothed, linear. We want to use exponential. Once you do this, maybe you make the 200 even thicker. And that's it. So you have 200, yes, 220, yes. So this is what you would have on your screen. Now let's go to, what do you call it? I want to take you to moving up, that's Expo. So I show you exactly how to download the platform. Just a moment. Screen, yeah, I think I should use this screen, yes. So let me, no, okay, no, sorry, not here. I just want to show you how to log. Okay, so once you get to markets, yes, once you get to the website, you go to special offer. All right, you go to special offer, select Expo members. All right, select Expo members, and then you go to tools, trading tools, all right? Go to trading tools. Now, this is a tool that Exco released to enhance our traders' performance on the market. So you go to trading tools, you would find here Exco Trend Rider Pro Indicator. Please just click on it and it will download. It's completely free, but it's activated when you have at least $120 in your account. All right, so ensure to have at least $120 in your account, because this is what the indicator works with some minimum balance on your account. All right, so I will still have to teach you on how to use the Exco Bollinger Band, but for today, today's strategy is focused on the Exco Trend Rider Pro and how to use it to trade the power play strategy. All right, so let's move on. So once you have downloaded it, what next? What next should I do? Now, let me take you on what you should do. Don't forget, those with mobile phone, apologies, you can't do this on your mobile phone. All right. So to install this on your system, you need to click on this golden book when you have your MetaTrader 4. Click on this golden book. It's called Meta Editor. Okay, hover your cursor on it. You see it's Meta Quotes Editor, Language Editor. You click on it, wait for it to boot. Just hold on for it to come up. And once it comes up, this is what you should have. What next should you do? You click on indicators. You see here, indicators. Click on indicators or double click it, or you click on the plus sign. Then right click on any of the indicators, select open folder. All right. Once you open a folder, where is it now? Yeah, so that's it. Once you open the folder, the indicator you downloaded, you just paste it here. Once you paste it here, you should see it here, Trend Rider Pro indicator. You see, you paste it here, then close the page, close the download page, close this, come back to your trading platform. All right, come down to indicators, right click and refresh. Once you right click and refresh, you should have it here, Trend Rider Pro indicator. So this is fine and good, and ensure that you have at least the minimum balance. Okay, I was sorry about that. We had a little cut on the internet. So here you select the color you wish, and then the input should be left as default, then okay. All right, then you okay it. Once you okay, this is what you should have. All right, this is what you should have. You should have your moving average 20, moving average 200, and of course, the same way you installed, I showed you to install the Trend Rider Pro. This should be the same way you install the moving average crossover indicator. All right, that is these black lines here. So let me show you that indicator list, EMA crossover signal. So please, you request this from your account manager. All right, it's free. We send this to you. So faster EMA sets it as 20, slower EMA sets it as 200, sound on. So even if you are not on your system, you're doing something. Once the crossover happens, an alarm will ring on your system. So you rush, come to your computer, and you know that it's time to trade again. Okay, so let's get down to back to the slides. Let's get back to the slide. Okay, let's get back to the slide and let's continue the presentation from there on how to implement the strategy. Okay, so I will be sharing that slide now. Just hold on. Slide 2, yep. Okay, so I trust everyone can still see my screen. Please go through TrendRider Pro setup again. Who else is having this challenge? Please go over how to install TrendRider Pro again. Wow. All right, so I'll do that one more time. I see a lot of requests on how to go over TrendRider Pro. Everyone is raising their hand. Yes, 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 yes. Okay, we'll go through it again. Sorry. I have to double share my screen again for our live participants here in the office. Just a moment. Okay, so this is it. Where are you? Share screen, share screen, share screen. All right, so this is it. I want to repeat how to install the TrendRider Pro again. Okay, so how do we do this? You go to the Exco, I think it's from here. So go to Exco membership, all right? This is the first thing to do because you need to download the trading tool first of all. So you go to the Exco membership section. Did I get that part? Go to special offers, select Exco members, all right? This is exclusive for you, guys, exclusive for you. Go to Exco members, come down to trading tools and click on it. Once you click on it, it will take you to this page where we keep improving on the trading tools we give to all Exco traders. So you'll find here the Exco TrendRider Pro indicator. Just click on it. All right, just click on it and you'll find it downloaded to your platform. So you click on download. All right, you can read up the articles here. So you see here, I can save it here if I wish, or I go to my download page and save it, but I've already done that, so no need. So you read up on it, read what it can do for you, fine and good. Once you've done that, all right, remember where you saved it. You need to remember where you saved it. Go there and copy it into your clipboard, okay? Copy it on your clipboard. Now go back to the MT4. You need to go back to the MT4. And how do you install it? First thing to do, after copying it from the page where you downloaded it, you come back to here, the Meta Quotes Language Editor. You see this golden book here? Click on it. Once you click on it, wait for it to boot up. Wait for it to boot up. Once it boots up, this is where you can write your own robot. You can build your own trading indicator, but we're not building any of those. Exco has done the job already. So to install it, please look to the left panel and select indicators, okay? Select indicators and double click on the indicator, all right? Once it has dropped down like this, select any indicator, right click on it, right click. Once you right click, there will be options here. I need you to select the open folder option. Once you select the open folder option, wait for it to boot up, all right? So the folder will open up like you see here. Then you use Control V, paste, all right? Once you paste that indicator here, you'll see TrendRider Pro pasted. Once you see it here, just close the folder, close the Meta Quote Editor, come back to your trading platform, all right? Under the indicator, of course, you won't see indicator there. Just right click on any space here. Right click and select refresh. Once you have refreshed, TrendRider Pro that you just pasted will appear here. Some people go the mile of closing the whole trading platform. No need to do that. Just right click, select refresh, and it will appear here. Once that is done, click on it and drag it onto your trading platform, all right? Click and drag onto the trading platform, and it will ask you if you want to change any of the parameters. No need to change any of the parameters. Leave everything as default if you may, and click OK, all right? And then you see this is your TrendRider Pro indicator, blue, and when it turns red, it means that we have a dominance or retracement, okay? I'm going to be explaining all of that. So let's get back to the strategy implementation. So all we've been discussing so far has been setup, the strategy setup so far, okay? We have been laying the foundation. So we're getting to the exciting part now, all right? Getting to the exciting part. All right, so I will have to share full screen and share screen again. So guys that are online, please bear with us because we're broadcasting this from every direction. Okay, so share screen, new share, where are you? Just a moment, it's loading up. All right, so here we are. Here we are. Okay, great. So this is what you should have on your screen as we speak, if you, in case you're doing it side by side with us here. So strategy implementation. How do we implement the strategy? Number one, let's go over it again. We determine the primary trend using the EMA crossover, that is EMA, exponential moving average 200 and exponential moving average 20. All right, so we use it to determine what is the primary trend. Number two, we get confirmation using the EMA crossover indicator. All right, so because sometimes when you have a flat market, this is where this will come to play. But if the moving average 20 is already above 200, that's really easy. But when we have a flat market, point number two will be it will come in very handy. Number three, this is where how and why we use the Trend Rider Pro. We use the Trend Rider Pro to determine the strongest bullish or bearish dominance in the trend. So first of all, we've determined the trend in point number one, but we're using the Trend Rider Pro to determine the points or the range in which the bulls are strongest. Okay, where they are dominating the market. All right, and then number four, we now apply the power play logic, and this is where the trick comes in. All right, so this is where I will need you to please watch and try to grab what I'm going to be sharing with you. All right, how to apply the power play logic after the foundation has been laid. Okay. Okay, so let's move on. So if you have your setup already, this is what you should have. Now, let's assume that the moving averages have played out. So what we have here is let me pick up a writing tool just a moment. So here we have moving average 20 is above moving average 200. Okay, I believe this is clear enough. Everyone is following, yes? And then next, we see that, okay, let me go back a bit. So moving average 20 is above moving average 200. But what do we have? This is Trend Rider Pro showing us red. What does it mean when Trend Rider Pro indicates red? It means that the bulls are not dominating the market at that time. In some other books, you'll find it, you can call it a retracement. So because the market never moves in a straight line, okay? You have a bullish move, then you have a correction or retracement. Then we have a resumption of the bullish trend, all right? Then again, we have a correction. So the Trend Rider Pro, in the midst of a trend, shows you when the trend has resumed again in the direction of the dominant trend. So I didn't mention anything, so we can have a bullish trend or we can have a bearish trend. So the Trend Rider Pro, in whatever trend we are in, like in the case we're studying or looking at it on our screen, we have a bullish trend. So on the bullish trend, the Trend Rider Pro is showing us again that the bulls are back on board. They are dominating the market. You see, when I trade the Forex market, I like telling stories about it, okay? Because it makes it more fun for me, right? So we have a trend. A primary trend, which is bullish, 20 is above 200. Clearly stated, clearly seen, the bulls have the markets. The bulls are dominating the market. But of course, as they are dominating the market, the bears want to flex their muscle a bit. All right, the bears want to flex their muscle a bit. Here we have Trend Rider Pro showing us that the bulls have are redominating the market, or they have come back in full force to dominate what is clearly theirs, because moving average 20 is above moving average 200. Okay, so Trend Rider Pro is here to further help us filter the market again, to show us bullish dominance or resumption of the bullish dominance. I hope we're following. Then come another play. All right, this is where we will now look for impulse. When the bulls are dominating the market within the Trend Rider Pro indication, all right, we're going to be looking for another impulse where the bears are still trying to flex their muscles to show that, look, we can still, act or show our strength in this market. And that we depict, or that we see, by the formation of the reddish candles. We know that on this chart, green candles represent the bullish candles, all right, and the red candles represent the bearish candles, all right. So when we see in a dominant bullish market, first by 20 being above 200, that's one, and again another dominated market, Trend Rider Pro, showing us that the bulls are dominating the market by showing us the indication there, the blue line, and we have a greenish candle. And here now we have reddish candles showing us the bears still trying to pull market down. This is where the game changes for the bulls. This is where the money is made. All right. So what is the strategy? What is the logic behind the power play strategy? Because it's a tussle. It's a tussle between the bulls and the bears. One is always trying to dominate. But here we have an upper hand. We have seen level one, the bulls are dominating, 20 is above 200. Level two, the bulls are dominating. Trend Rider Pro is showing us a bullish domination again. But here we have the red candles trying to, show their muscles. And this is where we catch them. And this is where we make money of people trying to sell in a bullish market. All right. This is why they always tell in the forex market, always follow the trend. Don't go against the trend. All right. Ride the trend. All these things you've been reading about and hearing, they are true if you follow it so. All right. So here we have the first signal where we have the first red candle, a bearish, what do you call it? The bear is trying to show that they have some power or have some muscles, all right, in a bullish dominated market. This is where we wait for them. We look for bearish candle formations in a bullish, if there's a word like that, bullishly dominated market, all right? So we look for those red candles, and that is where we wait for our move. That's where we wait for our strike. All right. So when you find the red candles forming after the bullish green candles, this is where you wait. So once we find the closing, once this candle closes, because once it's forming and trading, all right, you don't do anything. You wait for it to close. You have to wait for that candle to close. However, the time frame you are trading, must is that you wait for it to close. Once it has closed and closed as a red candle, you enter your pending orders. And in this case, we're using the buy stop pending order. The buy stop pending order is a kind of order we place such that if price should get to that level, it begins to buy. Either whether our computer is closed or whatever, the broker helps us to execute that trade. And then you set your stop loss exactly 1 pip under that candle, 1 pip. So this strategy takes into to cognizance your money management principles, your discipline. If you start breaking the rules on this strategy, just trust me, you're still going to blow up your account. You have to follow the rules. Okay? So it gives you money management principles and also gives you a good risk to reward ratio. Now, what happens? We have set our pending orders exactly 1 pip above the close of this candle, and we have set our stop loss 1 pip below the close of this candle. Why? Because we are waiting for when the bulls will come back and take back what belongs to them. You know, what is it that really belongs to them? This is their domain. Yes, this is their domain. So what is a red candle doing in a bullish domain? So this is the logic, this is the story, this is the fun thing about this strategy. You know, you'll be asking them questions. You know, when I'm trading this strategy, I get to ask questions. Guys, what are you doing in a bullish dominated market? Okay, you just want to give me free money. Yes, sometimes you will lose. I'm not saying that this strategy is going to give you 100% winning streak, but you're going to see exactly the kind of winning ratio you would have, especially when you apply the money management principles to it. All right. So when I see the red candles, I'm asking, guys, what are you doing in a bullishly dominated market? And next thing we see is that we didn't have a bullish candle. We have another bearish candle. Well, it doesn't matter. Once we see another red candle, we are moving that same pending order from the previous candle where it was, we're moving it forward or lower to this other one. I hope we're following. Good. So we're moving it again from where it was, moving it lower, pending order, buy stop, and stop loss, we're putting it under again. You see that? So we are waiting, because why are we so confident that this will happen? This is a bullish dominated market. The bears have nothing doing here. Their strength is overwhelmed by the bulls. So it's just a matter of time, patience, you know, before you see the bulls take over what belongs to them. And we wait for them with the pending order, and we protect our capital with our stop loss. All right. Don't forget, the rule in this business is never you lose money. All right. Losing money does not mean that price will not hit your stop loss. No, that's not what I'm talking about. All right. Don't lose money means you must not allow your trades to be running at a loss beyond what you can carry. All right. When you put your stop loss, a definite stop loss, and you set it. Anyway, we're coming to money management. Let me don't jump the gun. All right. So we have the first red candle. All right. First red candle. The bulls did not take what belongs to theirs. Second red candle happened. Okay. It closed and we moved our pending order a bit lower again. We're waiting for the bulls to hit. They didn't hit again, and we see the third candle again having a red, what do you call it, closure. Then what happens? The fourth candle, we see exactly that the bulls came back into the market, and boom, we have them. We have the bulls taking back market sentiment again. And there you can see, if you look closely, you'll see that this entry price never retraced back to hit our stop loss. I don't know if I did any other thing in that regards. No. Okay, so let me just use the a writing tool here. So if we are to follow this track, you see that this is what our stop loss will look like. Okay, and this will be, let me see if I can get another color of pen, ink color blue. Yeah, so this will be our entry somewhere here. So notice that upon that the bulls entered and triggered our pending order, our stop loss is in place. Please never you move your stop loss. This is one of the biggest mistakes forex traders make. They move stop loss, you know, in the belief that it will reverse again. No, it doesn't. Please don't be a prayer warrior when it comes to this thing. Set your stop loss and respect it. If it hits it, you already know the risk before you entered. You know, I often teach in the beginner's course, or I think it's in the mentorship class. But when I teach money management, I often teach that the forex trading is the only business that before you start, you already know the risk, the end game before you even enter. So before I enter a trade, you know, I already know, okay, I'm losing 1% of my account. That's it. So I'm not jittered. I'm not worried. If this thing goes down and hits my stop loss, no problem. I just know it's 1% and I'm waiting for the next trade again. But if it should go in my favor, it means I'm hitting 2%. And of course, if you look on this trade, if the distance between here to this point is 10 pips, I want you to just wonder what happened all the way here. Of course, you see price did not get back to our stop loss. So you could have even been making up to 30 pips by this simple movement. So this is the logic. This is the logic. And we will be getting into the trading platform. to see exactly how to execute this particular strategy. So I don't know if there's any question. Let me just quickly go through. Let me see. Osem is asking, please, which time on? I'm going to be sharing that with you, Mr. Osem. Prosperity is saying, is this software or app only for PC? What about mobile MT4? Unfortunately, on mobile, you only work with the pre platform. Let me see the other questions here. What time frame is this suitable? Paul Editan Yes, yes, yes. We're getting to that part now. All right. So just to look at it again. So once the red candles form, you are putting your pending order. Once the second candle forms, it is not the green candle, you're putting your pending order again. And the last one, you put your pending order and wait for the bulls to trigger your pending order. Okay, set little bit clear and little bit difficult. Okay, which part is difficult for you? Demola, please, what part is difficult for you? Do let me know. Does the trend rider makes the indicator more faster? Because I heard indicators lag. The Trend Rider Pro takes care of all of that. By the time you're downloading the trend, Mr. Thompson at DME, when you are downloading the Trend Rider Pro indicator, all right, please read on the articles. Most of the things that most indicators, why people preach against indicators, Trend Rider Pro took care of that, especially the case of repainting. Why most people don't use indicators is because of the issue of repainting. The indicators are repainting. All right, Trend Rider Pro takes care of that. It doesn't repaint. All right, what else? Please, what indicator can we use for our phone? We're coming to that. All right, we're coming to that, Mr. Michael. All right, so we've been able to take care of this. Risk to reward ratio is 1:2 minimum on this trading strategy. Minimum. Please don't go against it. Always target minimum 1:2 or even higher. Okay, and you will see why. Now coming to the indicate what do you call it? Time frames. Okay, so now listen, for everyone that asked the question of time frames, here is your answer. Okay, so the power play time frames implementation. All right, so of course, if you're trading the Forex market, you must know your personality, because your personality is what determines what time frame you should trade. Okay, your personality is what determines what time frame you should trade. Now, if you are a long-term investor, someone that's like you put money down and just walk away waiting for it to pan out well, it means you're a position trader. Okay, it means you're a position trader. It means for this strategy, you'll be looking to trade using just the D1 time frame. Okay, you'll just be looking to use the D1 time frame. Lots of people raising their hands. Please put down your questions. Okay. And what else? If you're a swing trader, someone that puts down, just a moment, let me see if there's any challenge here. I've seen a lot of questions. Okay. Okay, so if you're a swing trader, someone that, you like trading, but you don't like being on your system all the time, between 2 to 7 days, it means the time frame you should use to trade is the H4 time frame. This is for swing traders. So you see, we're going to cover everybody's style of trading. And then for day traders, people that want to place every day, you want to find an opportunity to trade this strategy. Day trading, your time frame is M30. Okay, M30. This is the time you will be using to trade. Okay, this is the time frame you'll be using to trade. Then for scalpers, you want to make rapid money all the time, you will be trading with M5. The duration for scalpers trade few minutes. So once they open trade, few minutes, they've closed it out. Day traders tend to close their trades within 24 hours span. Swing traders tend to close their trades, or the signals, it's not that they tend to close, but the signals generated when you trade on H4 often last between 2 to 7 days. Often last between 2 to 7 days. The signal that is found on M30 often lasts within 24 hours. And the signals that you find on this strategy on daily time frame often last beyond 7 days. So it's good you understand how and why these time frames are. So for everyone, please, maybe, I don't know for which one we'll start with. Anybody can make a suggestion. What time frame should we use to at least do a practical session for this session, for this strategy? I've been a trader. Someone is asking something here. What is this question? The hands that are being raised is blocking the question. Okay. It says, I've been in a trade that has been moving profit, but suddenly go back to hit my stop loss. Yeah. So it happens, yes, often. You'll be in a trade and it's profit. Before you know it, it goes back to hit your stop loss. Don't be worried about it. I'm going to teach you about money management, and it will change a lot about your perspective. You know, many a times the strategy is not the problem. Money management is the problem. So let's see. Let's see how many people. Okay, so the first person that responded, oh my God, so many responses. So we have here M30, Chima. We also have Innocent M5. Daily, someone Johnson is saying we should do daily and M30, M5, Pam Ayuba, 4 hours. Okay, we'll go through all of this. So let me go through, let's try to cover something very important. Oh, time is of an essence here. Okay, let's try to go to the strategy. I don't know. Money management, maybe because of time, I want us to cover a lot of examples. It's already 1:30 as I can see. So let's go straight to this. Maybe I'll just move this. Money management, because of time, I want to give everybody one strategy to work in. So maybe try to be in tomorrow's session. Please do whatever you can to be, but let's see how far we can go. If I can still cover this, I will cover it, because I want to give you full package today. So let's go to the trading platform straight up. Where is my MT4? Where are you? There you are. Okay, I need to use duplicate project. You duplicate. Okay, great. So let's work. Let's do this. Okay, so right now we don't have a signal. This is US 500. And by the way, let me try to stress something, guys. I'm being very serious now. Did I save that chart? Oh my goodness, I didn't save that. But if I look for it, probably I will be able to find it. The S&P 500. Now, this is one of the most effective places you should use this strategy. I'm saying most effective because it works best on stocks, all right? Although it still works on, what do you call it? On currencies. But I prefer it the most for you to use it on this particular financial asset or instrument, the USA 500 EX. Why the USA 500 EX? Now, this is it's called S&P 500, Standard & Poor's 500, top 500 companies in terms of capitalization in the US stock market. Okay, this particular asset class has been, that's why I said I totally forgot. I was reading up on it and I wanted to include it on the presentation. Somehow, some way, time did not permit. But over a period of 30 years, all right, the S&P 500 has been shown to give an average of 10% per annum. So this is an asset class that has been shown to be consistently on a bullish market for the past 30 years. Let me see if I can show you that a little bit. what you can, so you can understand what I'm talking about. So this is from, is it an auto scroll? So this is from, what year is this? 2017. All right, this is from 2017. How many years back is this now? About 4 or 5 years, yes? This market has been on a bullish market, just using the moving average 20 and 200. What you see here was, I think, COVID-19 or so. Yeah, no, this is COVID, sorry. I think this was the last financial crisis we had. Here was COVID-19, and immediately after COVID-19, it still recovered again, and we continued on a bullish market. Bullish, bullish, bullish up till today. We're still in a bullish market. 20 is still above 200. Okay, so that's why I said if you focus this strategy just on this particular pair, almost on a daily basis, you will get a trading, what do you call it? You get a trading signal. Yes, you get a trading signal, and because for the historical movement of these assets for the past 30 years, it has just been bullish, bullish, bullish. You'll find out that most of your trades are going to pan out very well. So let me share with you this. So let's go to H4 and try to look at the past setup that we had. Okay, I need to remove all of these things from my screen. La, la, la. Okay, let's have a definition. Let's stay there. You stay here. Okay. All right. So let me increase a little bit of a zoom here. So what do we have? This is, let me see if I can go. Let me use this as first example. Yes. So you see the EMA crossover indicator, the black arrow here, indicated to us that moving average 20 has crossed below moving average 200. So for me, for this strategy, I just want to see 20 above 200. This is the best opportunity for me. All right, just be patient and wait for 20 to be above 200. Trust me, this particular asset class, if at January, as January is just beginning now, right now at this price, each share of S&P 500 is 4,643. If you buy this share right now, at the end of the year, historically speaking, you will get 10% from this investment alone, even if you're not doing any analysis. All right, you just buy now and leave it till the end of the year. At the end of the year, you sure should get 10% increase worth of your investment. This is what 30 years of this instrument have shown. But now we want to optimize it by trading the bullish setup. All right, by just focusing on the bullish setup and trading on it. All right, so we have our trading setups. The Trend Rider Pro is there. The moving average 20 is there. Moving average 200 is there. The, what do you call it now? Indicator, the crossover indicator is also there, telling us exactly at what candle 20 came above 200. Okay, so we see that happened here exactly at this point. Let me pick up this tool. Yeah, so that happened exactly on 21 o'clock, 22 December 2021. And what do we have here? We have the first, what do you call it? Should I increase more zoom? Yeah. So we have the first red candle. See that? The first red candle has appeared. So what do we do? Is this a, let me use the, oh, sorry. I want to make it a little bit red, make it dotted lines. Okay, so here we're setting our pending order. Don't forget 1 pip. So let's even measure how many pips is this particular trade, this candle. So from the tip there to the bottom there is about 8 pips. Yes, it's about 8 pips. So 1 pip up, 1 pip down. So that's an average of 10 pips. So we pick this tool, put it 1 pip above it, and we pick another one. This should be where our stop loss will be. Let me see exactly where that will be. So we have from the stop to this, let's even put it, no, sorry. Let me double click and set it there. Okay, so that's it. So Look at the first one. We have the first red candle and we have the second red candle. You can see there that the next candle did not break or hit or trigger our pending order, right? After the closing, the next candle opened here and dropped, yes, but of course it just touched the stop loss, so it's triggering nothing. But before that day closed, or before the 4 hours elapsed, look at it, it went up and triggered our pending order. As soon as it triggered our pending order, what do we have? Market rallied. Okay, why are we buying at this point? Don't forget, 20 is above 200 and Trend Rider Pro is already blue. So this is a good moment to buy. So the logic of the power play is to wait for the red guys to show up their head. Once they rear up their head, you already know what to do. You wait for them because this is a market dominated by the bulls. Sooner or later, you see the patience here is about 8 hours. I hope you are understanding. The patience here is about 8 hours. So you need to know the time frame you're trading so that you can know the amount of patience you require to wait. Because some people have this adrenaline rush, trade, buy, sell. That's how that feeling goes. If you are that category, you need to go to the level of a scalper. All right. But here we're looking for swing trading. All right. So our trade was triggered here. Okay, it was triggered here. Now, how do you exit this? You can use trailing stop. All right. I've said that the minimum take profit should be at least 2 to 1. Yes, it should be at least 2 to 1. Now, let's find what is the take profit. So I'm using this tool. I'm going to use this blue marker to just mark what is the distance between where we entered and where our stop loss is. Okay, so this is it. So the first level is this. So that's level 1. And of course, 2 to 1 means that price getting to this level, we have already hit 2 times our profit. All right, we have already hit 2 times our profit. Great. So at this level alone, at this particular candle, which is how many hours now? 8 plus 8 plus 8, that's 24 hours. Yeah, 8 plus 8, 16, 16 plus 8, 24. So it has already hit 24 hours, which we said is about 2 to 7 days. So fine and good. You see already, we have already hit our target. But you can still ride the trend, okay? You can still ride the trend. And this is where, for our guys using mobile phones, this is where I'm going to show you something that you can use to start trading this strategy. Although I can tell you, it will not be as effective as using the Trend Rider Pro. Okay, the Trend Rider Pro gives you much more clarity as to when the bulls dominated the market. So for you, everyone using the mobile phone, what you need to do is to activate, okay, the moving average 8 indicator. So you put on 8, moving average 8, all right? And what do you call it? Maybe choose a color. What color can we use? Let's use blue. Brown. No. Maroon, yes. So let's use maroon and activate. So for those using a mobile phone, you can still implement this strategy using moving average 8. And even those using the laptops, all right? Those of you using the laptops, you use moving average 8 to run your trailing stop. I mean, to trail the market, okay? You use moving average 8 to trail or ride the trend. When price closes below the moving average 8, boom, you close your trade. All right, you close your trade. So with this simple strategy, you will optimize your profit. Please don't be scared of the stop loss. This is what I have to tell you in this strategy. As long as you are observing the 2:1 ratio, you would always come out profitable. you would always come out profitable. Okay, maximum is that you have a break even. And I'm going to prove that to you. I wish time will permit. 12:30, 1:30, we've already done 1 hour. So I want to, this class supposed to be 1 hour, 30 minutes. So let me see if I can use the last 15 minutes to go through money management, because I really want you to have a full package in one video. All right, so you watch this again, watch this again. Yes. The video is available. Okay, so don't forget, guys, everyone listening to me, I often say this in all of my classes. Yes, no matter how much I teach you this, no matter how much you see the example play out like this, please, you must go back and do a back test. This is the only way you can gain confidence. All right, that's the only way you can gain confidence, that by practicing it and seeing that it works. All right, and seeing that it works. This is the only way you can gain confidence to trade it. So let's say we entered the trade here when this was triggered, and at this second red line, this is 2:1, perfect profit. What can you do at this stage in the case you want to ride the trend? One thing you can do is to move your stop loss to break even. All right, you can move your stop loss in the case you want to do this. Let me put it as green to show that we're already in profit. Yeah. So you can move your stop loss to break even, meaning even if price comes back down and hit it, boom, you have just broken even. No loss, little profit. But if you decide to ride the trend all the way to price closing below moving average, here, 8, somewhere here, do you know how much profit you would have made? Let's see. The average, what do you call it? The size of this thing is 10 pips. Let's make that 10 pips, okay? So you enter the trade here. Stop loss was 10 pips down, somewhere here. Can you see it? 10.104. That's 10 pips. Now look at when price closed. Price closed at 85 pips above. So this is risk to reward ratio 1:8. So for taking a 1% risk, okay, you have made 10%. Now, what is the time lag in this thing? We started trading on 22nd and we closed the trade on 29th. So you still see 7 days. So this is still, it still follows the rules. H4, entering a trade on H4, the lifespan of that signal often lasts between 2 to 7 days. You see exactly 7th day, it's advised that you should close that trade. So instead of buying S&P 500 and waiting 1 full year, in 1 week, you have already made 8% of that, of what you should wait in 1 year. So this is the beauty of this strategy. This is the beauty of the market, all right? So you can cash out as many times as you wish. And when I launched this strategy, in fact, in the book I read it also, you can actually do multiple trade entry, okay? You can still enter a trade here. The second, you can still enter a trade here. So for every red candle here, so we're moving our pending order. No, this is trading stop now. We're moving our trading stop to this point. All right. So the second trade also enters here. So this second one, we're entering. This is the red candle. The same place we put the stop loss for the second trade, we're moving our trailing stop, our take profit for this first trade, moving it up here. So instead of making 8% profit from this second trade, we can add an additional maybe 4% extra. So you find out that in 1 week, you can cash out up to 10% alone on this trade. I think I've taken enough example because of those that may not, and which I advise you to try to do to qualify for the next strategies I'm going to be teaching from tomorrow, Wednesday, Thursday. All right. So let me try to give you a full dose for today. So this you can watch again and remember the strategy implementation. All right. So let's go to the money management so that you know exactly, because no matter the strategy I teach you and I don't teach you money management, you're still doomed to fail. That's the truth. So let's go to money management so you understand the depth and reason why you must follow the rules in money management, okay, and apply the 2-to-1 ratio. I'll be sharing my screen again, so please, the screen may go blank for those of you online. Yep. So slideshow, share the screen, and for everyone here, just a moment. Ouch. It's not showing. This is not where it should be. Sorry. Okay, just a moment. Share screen. Sorry. Tap on still from current slide. Yep. Okay, there we are. So sharing screen, share the screen. Oh my God, it's still not sharing. Why? Sorry guys, having a little challenge. So share screen too. Okay, good now. All right, so we're good. Everyone, we're good. Let me see, taking some Q&As. I suggest we use M5 time frame for practical. Owoho Prince. Let me go through money management. Time permits, I'll come back to M5, okay? M5 is really interesting. Osem said the US stock market is said to be in a bubble that will soon burst, especially with the Fed's plan to start tapering by March. Is it still wise to use the strategy on S&P 500? For me, I told you I only use it when I see the bullish distance, the bullish setup. All right. You see, even in COVID-19, you saw how the S&P 500 dropped. So this calls for patience. You have to be patient. For me, I use it only when I see a bullish setup. So no matter, yes, that bubble has been ringing since last year that we're going to see a bubble bust on the US stock market. True, very true. Like I said, when I started teaching the strategy, I said I only use it when I see the bullish setups. All right. Fine and good. Let me quickly take you through money management. It's very important for everyone that is joining us on this program. So, the consistently winning trader, what it takes to be a consistent winning trader. Sorry, I need to pick up my writing tools again. So the method, we have learned the method, okay? The strategy I just taught you. Manage money, this is the one I'm going to be taking you on. So you see, if this is all it takes to be successful, you're going to have already 2/3. Yes? Because I'm showing you a strategy that works. This strategy works. There's there's no missing word on it. It works. Managing of money, I'm going to show you a secret or a system to do proper money management. Don't forget, there are 4 types of analysis in Forex. One is technical analysis, sentimental analysis, fundamental analysis, like Mr. Ozem just spoke about Fed's tapering and will cause a bubble burst. That's fundamental analysis. The 4th one is risk analysis, okay? And that happens when you want to click the button, buy or sell, all right? You must conduct your risk analysis, and that is where I want to show you how to do this. This other part, trust me, I cannot help you in this part. And unfortunately, it occupies 60% of what will make you a successful trader. So please, the discipline is in you. The bulk of what will make you a successful trader, 60% of it lies on you. The strategy works. The money management principle works, and I'm going to show you, okay? But the major problem is self-management. Motivation, the discipline to follow, the focus, the determination to follow it, and so many other things that follow. Please, this is where the bulk of the thing lies. The winning system, which is the strategy that I just shared with you, only constitutes 10% of what makes you a successful trader. Trust me, I can give you lots and lots. I have I don't know if I'm calling it an encyclopedia. I have over 100 trading strategies I've been researching, and I have trading tools for them. All right. So the strategy is not always the problem. strategy is there. I found out it just constitutes 10%. Money management, which is position strategy, position sizing, constitutes 30% of what makes you a successful trader. And I'm going to be giving you also a tool to help you manage this, trade this, okay? Position sizing. And good thing is that position sizing to a great extent helps you in your psychology. It helps the psychology of a trader. Because what is it that makes the trader to lose? You have an account balance of $1,000 and we're asking you to just risk 1%. What is 1%? $10. Good. And that's what money management or position sizing does. Yes? If we can help you stick to the rules of every trade you're trading, only risk $10. We have helped you a lot in your psychology, how you manage your money. The reason is if we cannot help you with what we're going to teach you on position sizing, and you allow this thing, you start shifting your stop loss. Okay, Gabriel, don't worry. I think I know this thing very well. You know, when it gets to $20, it's going to reverse. Before you know it, $20 gets to $50. Already, this is 5% of your account balance. At 5% account balance, trust me, you're going to throw away every rules out of the window and you're going to switch to prayer mode. That's the truth. You switch to prayer mode because by this time you see it getting to 100. This is already 10%. By the time you multiply $100 by your local currency, you know, I know a lot of people joining us from all across Africa, in the Philippines, and our Asian partners. You know, by the time you multiply it dollar with your local currency, you're already seeing thousands of, you know, whatever your currency is. The psychology is already gone. You cannot afford to lose that kind of money. But you find out that it's still better for you to close at $100. Because before, when you leave it, you start seeing this thing gets to minus 300, 500, before you know it, boom, you've lost all the money. So this is why I said, if we can help you in position sizing to a great extent, we have helped you to manage the psychology of the trader. So let's get into why money management helps you to become consistently profitable. With a simple, what do you call it, rule. This is something that you can relate with, a little experiment. Relating this with taking 20 trades a month, all right? Just 20 trades. Either you're a scalper or a day trader or whatever, okay? Just taking 20 trades. Of course, a scalper can do up to 20 trades a day. So let's just leave that one. So if you're a scalper, this month here, just cancel it and put day, okay? Let's cancel it and put day, all right? So let's assume this is 20 trades a day or 20 trades a month. You can follow the simple rule because often times than not, many traders call and say, Gabriel, please give us what's the holy grail of trading. Give us your holy grail strategy, whatever you call it, okay? Your holy grail strategy. I don't know, holy G, let's put it like that. Okay, look, there is nothing like this. It does not exist. This does not exist. There's nothing like holy grail strategy, a strategy that gives you 100% winning streak. It does not exist. Never, nowhere does it exist. Let me tell you what exists. What exists, the holy grail in trading is being able to apply risk and money management. And this is the secret. This is the formula to anything. When you say holy grail trading, this is the formula. What is that formula? Let me try to break it down in simple words. The holy grail in trading is that when you want to trade, risk 1% of your account when you trade. But when you want to take profit, that's the reward, at least take extra 1.5% profit from what you are risking. Okay, so this is it. That's the same calculation here. So if you are risking 2%, let your potential profits be taken at 3%. You still find out that this is still 0.5% higher than what you are risking. This is the holy grail in trading. Now, let's take this 20 trades per month. So what does that mean? If you have a strategy, all right, that gives you a 60% average winning rate, 60% average winning rate, this strategy you're going to have as a winner. Sorry, guys, I lost you there. Okay, so 60% of 20 trades means 12 wins, and 40% losing of 20 trades means you lost 8 trades. It means you lost 8 trades. So first things first, we've given you a strategy that gives you at least 60% winning rate. So that has been taken care of. Now, the next thing is being able to apply the second thing, the rules of the money management. So that means for every 20 trades, 60% will give you 12 winning trades, and 40% losing will give you 8 losers. If you, sorry. So if you're applying the rules that every trade I win, I'm going to take 3% profit, and for my stop losses, I'm only going to lose 2%. What this means is that 12 trades multiplied by 3%, yeah, your potential profit will give you 36% profit. And if I'm losing 2% per trade, 8 losses means 8 multiplied by 2%. It means I'm losing 16%. So 36 minus 16 will give you an average of 20%. Everyone listening to me, please, you can go and research this by yourself. Okay, even the people, maybe some of you want to do position trading, some of you want to do scalping. Please, I've illustrated it enough. Just take one day and see if you can find 20 trades in it and calculate what is your average winning ratio and apply this thing to it, and you will see for yourself. Now, this is for average winning ratio of 60%. That's the strategy, okay? Don't forget, going into the week, I'm even going to be giving more. So this is just the beginning. Tomorrow, I'll be teaching you another strategy. So do well to be in that class. Now, let's even assume we have a very stupid strategy that gives you a 50% winning ratio. Do you know what this may be? This could even mean, flipping of a coin. You toss a coin. If it's head, I buy. If it's tail, I sell. All right. So, well, I wouldn't recommend that kind of strategy. That's gambling. Yes. So even with a simple strategy that gives you a 50-50, that's you lost 50 trades, you gained 50 trades. If you can apply what I have now come to realize is the holy grail of trading, which is your risk to reward ratio, you're still going to come out profitable. So let's still take the our experiment as 20 trades per month. So 10 trades, 50% of 20 will give you 10 wins. 50% of 20 losses will give you 10 losses. If we apply 3% to our losses or our gain, we'll get 30% profit. If we apply 2% to our losses, it means 10 multiplied by 2, we're losing 20%. At the end of the month, we will still get 10%. This is not what any bank can give you. This is not, this is what the bank will give you per annum. That's if you don't make any withdrawals from your ATM, because the rules now is if you withdraw more than 2 times from your ATM, your interest, savings account interest is gone. So 10% is a very decent return on investment. using this strategy. So what then is it in it for you? It's just ability for you to apply the discipline. So that's the part I cannot help you on. Mine is to do this research. Trust me, it's been a very hectic 2 or 3 weeks now preparing for this program. We started preparing for this since December. We did a lot of research, and and here we are delivering it already. So please, as I said, I can never ever convince you or give you that confidence to trade this except you try to do it yourself, research it and apply it. Okay, let me see if there are more questions. Is this set up strictly for bullish movements only? Clement, no, I said I use this strategy. It works both ways. It's a power play strategy. When the bears are in charge, it works again. It works also. But because the S&P 500 is a predominantly bullish market for over 30 years, all right, so it's a no-brainer to just apply this strategy there and cash out almost every week. So this is why I had to do this research. I had to do this research to everyone. All right, I stop sharing now. So let me share again. Sorry for that. So let's take that question. I hope I answered that question right. I hope I answered that question right. So any more questions, please let me know. So Clemens is asking us again, so you haven't used support and resistance level and candlestick pattern since today's trading? No, I didn't use it. But one thing you can be sure that is very close. Oh, sorry. Am I sharing my screen yet? No, which one are you seeing? I'm not sure what you can see now. I want to share my screen, but I'm having a little challenge here. So one thing I'll share with you, I'll tell you what is closest to this strategy. What is closest to this strategy is the bullish engulfing patterns. Okay, the closest candlestick pattern we use for this strategy is the bullish engulfing patterns. You'll find out that good. You'll find out that let me go back to that point. Where is it? If I share this, okay, let's just use this. You'll find out that if we have here, come down here, okay, and delete this one. So the closest we have is the bullish engulfing pattern. So it still applies. Everything I still teach is still there. So look at this. Let's assume that the blue line you see here are all, because we still have the red candle forming everywhere. So let me just shift this, convert this blue candle to red. So it's still the closest that we have. So you see, once there's a bullish candle engulfing the last bearish candle, boom, there you have it. Okay, there you still have it. So this is the what do you call it? It still applies. We still use candlestick patterns. The only thing we're not using here is the key support areas and resistance area, but we are still using it. Don't forget, when I was teaching you support and resistance, I taught you about resistance points and support points, that every candle in itself has a resistance and has a support. So when you are using this on a daily candlestick, imagine a whole day having a stop here. Let me show you something. So to let you know, so let's look at this red candle. So if this was a daily candle, it means that all price came this point and stopped. So this is a strong resistance point. So we're still using it. The same rules from beginner course is still applicable down to this advanced course that we're doing today. Okay, so it's there. Let me see. Clement is asking again, as a scalper trading 20 times a day, isn't it over trading? Because I know it is advised not to over trade. Well, Scalpers, I don't know at what level we say scalpers are over trading, because these guys are making money frequently in few minutes. So I don't know. You have to judge for yourself. When you make enough money as a scalper, I'll advise you trade 5 times with this strategy at odd numbers, because we're using a risk to reward ratio 1:2. So 1:2, what does that mean? It means that if you have 3 losing trades in 5 trades, you have 3 losing trades, you are still going to come out profitable. So 3 losing trades is 3% loss, while the 2 trades that you won will be 4% profit. Do you see that? Yes. So, and the strategy is that you should do 1:2. So you do 5 trades, so that even if you lose 3 trades, you are losing 3%. But you won 2 trades, you have gained 4%. So you are still profitable. All right. Then how much more if you win 3 and lose 2? So that's 6% against 2. So in one day, you have made 4%. So that's the beauty. That's for scalpers. My advice to you is to do maximum 5 trades a day. All right. If you lose up to 3 trades for that day, just close for that day. That's not a good day. All right. Just forget it. You've lost 3. You've lost 3%. Just close and go. You must not trade to win. Tomorrow is another day. As I often say, the forex trading is like a bus stop. If you miss the bus today, wait again. Another bus will come and pick you up. Let's take up a lot of questions. We've taken a lot of time. Some people's data is running out. We've dropped from 75 to 50 to 60 now attendees. So it means people are already tired. So that means we need to be wrapping up. Please, what do you think about trading with robots? I trade with robots, and I've been part of the team researching a particular robot we're going to release very soon on Exco. All right. So far, we've been testing it. We've been testing it for over 2 years now. I mean, testing the data. All right, the trading history. So I'm a very big fan of trading robots. I don't trade, even when I trade manually, I put a robot to help me close the trade. Because I'm not always there. I'm training and I'm doing all sorts of things. All right. So I'm a very big fan of algorithmic trading. Okay, algo trading, what we call algo trading. I'm a very big fan. I can't do everything. I can't be on watching my system all the time. All right, you just put a robot to do it for you. I want to know whether there is difference between EMA 220 and that of 21 and 18 and 8. Yes, there is difference. The difference is in the period. 8 moving average is only calculating 8 candles back. 21 moving average is only calculating 21 candles back. 20, 20, 200, 200. And don't forget, 200 moving average is a very strong, powerful indicator. Especially, it's used most times in stocks trading. All right. Whenever price is above the moving average 200, it's a good thing. All right, it's very, very positive. Can we use small accounts for USA 500? Yes, please. This is a very important question, because many people come to US 500 and when they want to open a trade, they see 1.0. This 1.0 is just like 0.01. Please, it does not mean one standard lot. So you can open a trade with even $100 account. Thank you, Solomon, for that question. Does this apply to all markets? All markets. In fact, let's look at one market now. Let's see if we can squeeze in something here. GBP USD. Oh, we're already on GBP USD, right? So this is GBP USD, guys. Let's look at it quickly. Where did it start? Look at where it started, right? Guys, you can see this. Here we started, we have, what do you call it? Was this the one we used for example before? We used S&P 500, right? We used it. So this is another one. Okay, so thank you. I thought I was already repeating myself. So we started the trade here. So moving average 20 is above moving average 200. What do you call it? Trend Rider Pro is blue. We're not looking at moving average 8 at the moment, but let's leave it there. So where is our first red candle? Let's increase the zoom. First red candle, where are you? You appeared here. Boom. Let me use, let's use this tool. Okay, let's change it to another color for visibility. Dark blue, this, okay? So we have it there, we put the second, and this is where our stop loss should be. I hope we're all following, because, oh, sorry, this is H4 again. I wish I can do M5. So many people ask for M5, scalping. Let me go to M5, or let's finish H4. Let me just finish H4, I'll still do M5. So look at this. I don't stay so much on the system, so these are my time frames. So look at this. Let's be very real here. You see, nothing is manipulated here. So we put our pending order here and our stop loss here. The first green candle came, it did not take out our pending order. The second one came, look at it, it triggered it and set our stop loss. So let's see, from our entry to our stop loss, look at that, 15 pips. It means that our take profit should be 30 pips. Did it get to 30? Absolutely no. It got to 17 and the red candle came and hit our stop loss. Do you see that? So red candle appeared, second red candle appeared, we move our stop loss, our pending order there, and our stop loss, sorry, and our stop loss here. So we're focusing on this candle now. Look at this. So the next one again, the same thing. The next one again, can you see? First red, second red. The blue, green candle did not take out our entry. We don't have an entry. What happened? After the green candle formed, still leave it there because we don't know if there will be a new green candle that will take it out. But what happened next? We saw another red candle formation. What do? Put your stop loss under, move your take profit, your pending order here again. You see that? And then what happened next? Look at it, bullish engulfing pattern. It took it out, and let's measure it. 1:2. So if our stop loss is 22, take profit will be 44. The price get to 44. Yes, it got to 44. It got to 67. It got to 73. So if you wanted to take profit here, why not? But if you wanted to wait until it crossed moving average 8, why not? Whichever, but at least minimum take 44 pips. Once it gets to 44 pips, close it. You are done. All right, you move on. So let's see M5. Let me quickly see what will happen on M5. So let's see trade continue to. Yes, sir. Question, yes.
This is a good example where our stop loss was setting up.
Yes.
So provided you have all of the indicators telling you it's still bullish.
Yes.
So even if your stop loss is setting,
Mm-hmm.
monitor the market and follow up with your buy stop order.
Yes, follow up with it. Once you see another red candle, you follow, you place it again. Wait for the next bullish dominance so to kickstart. Yes, sir. Okay, so everyone online, I hope you heard the question. He was asking, so our stop loss was taken out by this candle. Yes, so he was asking, so that means we need to still watch out for continue with the trading logic, and that's yes. The answer is yes. Your stop loss is taken, don't give up. Wait for the next signal again. I think you should work with an array of 5 trades. If you lose 3 times, then take a pause. 3 times is just 3% of your account. But when you win, even one win will already cover up for almost 3 of that losses, over 70% of that losses. So this is why you must stick to the 1:2 ratio. Okay, let me see. Quickly, we're wrapping up now, guys. Don't worry, we're wrapping up. Let's see where the signal began. Let's see where this signal began. Is this the current? Let's see. So we have what do you call it now? This is M5. Right now, yes, we're bearish. So moving average 20 is below moving average 200. Trend Rider Pro is indicating sell. So what are we waiting? What are we supposed to do here? We are beginning to see the bulls rear up their ugly head. They shouldn't be here. So you see them. We're waiting for. This is the first candle. Let me mark it again. So this is the first candle. What is a bullish guy doing in a bearish candle? Well, it was not taken out by the red candle. We wait to see. So the next candle formed is still bullish. So we move our pending order. Don't forget, this will now be sell stop. Sorry. So this will now be sell stop. This will now be a sell stop. Good. And we waited for it to be taken out. It wasn't. You see that it kept forming higher lows, higher lows. This is another class I will teach you on. All right, it's still the same thing anyway. So the next candle formed as green again. We move our stop loss above, move the pending order here, waiting for a red candle to come and smash it down, and we start trading in that direction. Okay, this is still unfolding. Let's look in the past and see what it was. So let's look for when moving average just crossed what do you call it, the first 200. Come on, where are you? Oh my goodness, long time ago. So look at the first one here. Look at it. So we started right now we just entered the bearish trend. This was where the bullish trend started from. So I wanted to start from the very, very beginning. Whew. So we started here, signal started here, 20 crossed 200 here. So you see, if you're using your bare eyes, it will be very difficult to see anything here. So this is it. This is why I'm still giving you this indicator. All right. So, so here we have red, red, red. So the red guy started appearing here. You see it. And we place our pending order just underneath it. Waiting for the bulls to take over or the bullish engulfing, we didn't see. The next thing we saw was another red. You drag, oh my goodness, sorry, I have to double click. I keep forgetting this. You drag it here and put your stop loss here again. You see that? What do we see? We see that the next candle was bullish, but it didn't take it out. Nope, so we leave it. The next candle was bullish. Can you see it didn't take it out? So we still leave it. Look at what happened next. Boom. The next candle engulfed, took up, gave us our entry, and we have to take our measurement. What is our measurement? Remember, it's 5 minutes chart, so it should be small pips. So from here to the stop loss, it's just 4 pips, 4.4. So we're targeting 9.6 or 8 pips. So the price gets to that. Look at it. Exactly 9.6. Somewhere here, 9.8. Finally, just put it. It got, at least it got to a take profit. You see that? So you got to a take profit. You have already eaten that one. So if you're a scalper, I think you should stick to the rule. Don't try to ride the trend. For M5, yes, just stick to the rule. 1:2. Once it hits it, boom, you come for the next trade. Where is our next trade? Look at our next trade here. Our next trade, after hitting take profit here, you can even start with this next guy here. The next red candle, look at him here. You waited for this guy, it didn't take through. You adjust your stop loss. The next one, adjust again. Look at him, it's smaller here. Then, of course, when it opened, I want to believe that this was the first thing. It came down, then triggered. Look at this, triggered our entry. Then this trade here, oh my goodness, that's the last zoom. I can't tell if it touched. Let me delete this guy and see what happened. Oh, it hit our stop loss here. Can you see that? So this particular trade hit our stop loss. Let me see, entering from here. Stop loss is just 2 pips. 2 pips here. Did it get there? Oh, it got to 2.8. Then the next one hits down our stop loss. But then, I think I made a mistake here. I don't know if everybody's seeing this too. My stop loss is also above where it should be. Remember, we said 1 pip, right? It should be 1 pip. 1 pip below. So I don't think it will hit it. It won't touch it. If it's 1 pip, if we really get 1 pip from here, it wouldn't touch it. So this will still give us a good profit. This will give us a big profit. Now, let's assume, let's follow it through. Let's follow it through. I want to show you something because we didn't get to this point. So from here to here is 2.4. So we are measuring 2.4 is 4.8. So somewhere around here, we have hit our take profit. Somewhere here, we hit take profit. So next trade is this guy. Next trade is this guy. So can you see it got triggered, but hit and hit stop loss was hit. Already we have made 2 to 4%, right? And now we're losing 1%. So finally we have 3% loss. Now look at this. We have entered the red zone of Trend Rider Pro. It means that the bulls have lost steam. So we cannot be looking for any trade when Trend Rider Pro is showing us red. So we must wait for another bullish signal. All right, we must wait. So here again, this is our first trade, but it was lost by this because I don't think this reached. And again, we entered another red zone. So please, I won't have time to go further to look into. I believe the video we have done is almost 2 hours on the dot. We have been able to cover a whole lot. So please take time, go through the strategy, the video, practice by yourself, and see how this plays out for you. Let me see questions. I have a question. I noticed it's more easier to trade and make profit when your TP is small than your stop loss. Shego Senago, this is a big problem in trading. People take small profits, but when it's going to hit their stop loss, it takes more. You see, the problem with what you just said is that let's assume we reverse it. So we want to take 1% profit and lose 2 times. It means that for us to recover, we need to have more winning trades than losing trades. But here you have a strategy that works. It is better to reverse, to put it as have higher level of take profit and shorter stop loss, according to the strategy's prescription. All right, according to the strategy's prescription. Okay, Michael James, please. So for the EMA 8 for phone users, at what point can we know when to enter a trade? For EMA 8 users, okay, once let's go back to this. For EMA trade users, you are waiting for price to be above 8. Once there is any candle that closes above EMA 8, that is your entry. But once trading is below EMA 8, notice this. Notice that when Trend Rider Pro turned red, candles were also below EMA 8. All right. So for phone users, once the candles start trading below EMA 8, just know that also there is a likelihood that Trend Rider is also below red. Notice here that when price became above Trend Rider Pro, price was also above EMA 8. But you see, this is where Trend Rider Pro will be more efficient. Notice here that price started trading under EMA 8, but Trend Rider Pro was still showing positive. So this is the only limitation that you're going to have using EMA 8. Let me try to take up all the questions. Kosi, Cynthia, as a beginner, I didn't start easily, so I'm lost. Is there any summary of this course so I can go through it and understand from scratch? Yes, please. What you need to do, request from your account manager. We had a beginner course even last week, and it's all compiled in videos. All right, so you can watch it and catch up exactly where we are today. Explain more on money management. If you have $50 in your account, how can you calculate how much you are willing to use? Oh my goodness, this is a very important question. Unfortunately, I won't be able to cover it in this class. So please try and join tomorrow's session. I want to show you a little example how to do this, okay? There is this tool I'm going to share to everyone in the mentorship class. All right, it's the money management calculator. So if you have your account balance as 100, let's say $100, and you just want to stake 1%, 1% is $1. So your stop loss is 5, let's say 5 pips. If you're using scalping strategy, it means the lot size you must use to trade is 0.02. Okay, this is money management. This is where you, this is the tool you must use to do money management, because the real root of money management is in lot size calculation. If you don't know what lot size to use to open a trade so that it caters for the risk on your capital, All right, this is the biggest problem in Forex. So please try and be here if you can tomorrow so I can give you this tool and you know exactly how to use it, okay? What else am I missing? What else am I missing? Lots of questions. Okay, I think that's the last question. What is the meaning of red and green candles? What does it represent? Anonymous attendee, you have to pass through a beginner course and you would understand, all right? Forex can look very strange to a beginner, but once you go through our beginner course, trust me, you'll understand everything. And this is where we'll be drawing the curtain. I wish to get more enlightenment. I didn't get your question. I will call after the class. Thank you, Abraham. Okay, how many pips make $1? It depends on your pip, your lot size. So we covered all of this in the beginner course. There's what is called pip value. All right, so you will have to go through our beginner course. Thank you so much, everyone that took time to be here. I can't mention all of your names. Shenuga is raising a hand. I can't take any more questions, but please watch the video, contact your account managers, do all you can to be in the rest of the mentorship class, and you will be added to the premium Telegram handle also. So for everyone that qualifies for the mentorship programs continuing tomorrow, you will be added to our premium Telegram handle also. So thank you all. It's been a wonderful time. I wish you all the success you deserve in 2022. Please trade carefully, trade wisely. Have a blessed year ahead. Bye-bye.